Welcome back, everybody. This is the second panel of day 2, saving the crucial role of agents and banks in the remittance industry. Now, in this session, we're going to see how banks and traditional agents are grappling with the new reality. As everything goes digital, take a closer look at how traditional agents are integrating technology to fit into the era of digital transformation in the money transfer industry and what more can be done. Now, today I'm very pleased to introduce our next set of panelists. Firstly, we have a no stranger to this event, Sharon Gibson, the CEO of JMMB Money Transfer. She casually strolls back to her seat. Sharon is a seasoned financial expert with over 2 decades at managerial level in the Jamaican industry, with a proven track record of delivering exceptional client experience, driving innovation and achieving solid results, as evidenced by the subsidiary's growth in revenue and market share. Now, Sharon serves as a director of the Jamaica Money Remittance Association and a member of the Modernisation of Jamaica's Remittance Industry Project Steering Committee. Let's hear it for Sharon. We also have Leon Isaacs, who is the CEO and founder of IPR Global, a seasoned expert and business leader in the payments and international development fields, with a particular expertise in migrant remittances. He's over 30 years of hands-on experience, and we're very honored to have him here. Thank you, Leon. And finally, my co-host for the awards ceremony yesterday, we have George Boateng, the COO of Unity Link, an industry leader in processing secure remittance transactions and one of the most reputable money transfer companies in Europe. With over 10 years of experience in the remittance industry, George is responsible for partnership collaborations and growth activities that support overall business objectives and plans. He has a proven track record of successfully developing and motivating people to maximize sales, control cost, and optimize KPI performance. Please welcome George Boateng. And moderating today's session, last but not least, is Ababacar Seck, who is the Managing Director for Africa at RemitONE. Ababacar has extensive experience and sound expertise on the money transfer business, particularly in the African market. He also was the CEO of Money Express and Connect Africa Payments, and contributed to the launching of several initiatives in the field. And if you ask very nicely, he may sing you a Bob Marley song as well. Please put it together for Ababacar Seck. Once again, we will have an hour for the panel discussion, with about 30 minutes for questions from you wonderful people in the room and those joining us virtually as well. Enjoy.
Thank you very much, and good morning, all. I'm very pleased to share this panel with our expert panelists. We have a bunch of questions, very interesting, regarding how to save the crucial roles of agents and banks in the remittance industry. So my first question will be for George, and afterwards the other panelists could share their answer. Why are paid-out transactions more and more shifting from agents to wallet?
Thank you. This is something that is going to happen because mobile money in Africa and Asia is now becoming the main source for which people use to transfer money. Almost 70% of transfers to Ghana, for example, goes through mobile money. So it is the sender that dictates as to where the money should be sent. Although the beneficiary will be the person who would opt which service he or she wants to have. For example, if I'm in the rural area, I don't have access to bank, I have a mobile wallet. I would rather get the money on my mobile wallet rather than journeying or going somewhere to look for a bank. So the drift is always going to be towards where the majority of the people have access, and which is mobile money in Africa at the moment.
Leon, any thought?
Well, completely agree with what George is saying. That's part of a changing trend on the payout side. And it's clearly because mobile money, as we talked about yesterday, is very convenient, particularly where you don't have physical networks. But I think it's broader than that. As more people, I think two things, as more people become financially included or have access to accounts, mobile money is important, but actually even if that account's offered through a bank, and that bank might historically have paid out cash to the person, if that person has now opened an account there, the money would be credited straight to that account. So we're seeing that shift change, and that's partially also driven from the send side. As you said, the sender has historically been the one who determines what method is used. As the sender becomes more and more used to sending money using digital means, they're also looking for something on the receive side that makes it as easy. And I think finally, at the moment, one of the drivers is cost, and it is generally cheaper to send money by digital means than it is by cash. Not always, but in most cases. And I think that's obviously also having an impact on the role of the agent on the receive side.
Thank you, Sharon. Same situation in your country?
No, it's not.
So different in Jamaica?
Yeah, right. So in Jamaica, there's only one financial institution today that offers mobile wallet. But it is the thrust of the government, because the CBDC was launched recently. So I think over time, the other financial institutions or near banks will take up the mobile wallet offering.
Okay. Well,
just to top it up, it's also to do with security. In terms of money, moving money from one point to the other in third world country becomes very risky. So with people having their money on a wallet, it's so safe, and people use it to pay all other services, irrespective. So I think part of it is also security.
well, I mean, this is very, scary for the banks and the agents. You're saying that now all the transactions are going to the telcos with their mobile wallet. So this leads us to our second question for Leon. How will banks and traditional agents cope with this new reality?
Well, I guess you have to distinguish. I think, well, let's take a couple of steps back. First of all, I think in most instances, it's very rare for agents and certainly banks to be their sole business being providing remittances, whether it's pay in or pay out. It's always been part of the portfolio. And that's why if you walk down the high street here, you'll see lots of, I guess what were internet shops. There's now all sorts of places that are selling phone top-up services, all sorts of agents that are here that make their money in other ways. So, for them, this is just either another challenge or another opportunity. They're still going to have their premises, and they're still going to offer other services, and they will provide some remittances, but probably far less than they would before. I think the challenge for many of those agents is what are the products that they can offer that are associated with remittances. So this is where we come back to, we might have made our money from sending money, from collecting money. Here in the UK, we get paid a percentage of the fee that the customer pays, and maybe some FX, and that goes into our general business expense. If that's reducing or disappearing for us, are there other products and services that we can offer that are associated? And I think this is where probably, George, you can talk to more, as a Unity Link being a community-based service is actually a place that Ghanaians can go to as part of, actually, it's part of their life, isn't it? They go to see other Ghanaians, they trust other Ghanaians. It's what other products, whether financial services or anything else, can come in there. And I think the role for agents going forward who offer the traditional services is going to be limited, but customer contact is still very important, and that trust element, particularly for people wanting to know. We've done research on this which has shown that a lot of people want to look the person they're giving their money to in the eye and know if something doesn't work, I can come back here and actually say, I've got a problem, can you help me? They know where to go. It's not some online bot that's going to say, oh, you have to do this and it doesn't work. So there's going to be quite a long tail, I think. It's not as if we're going to see agents just disappear overnight. So for me, it's a lot about how you diversify into other connected areas, but how, for agents, they maximize the things that they're really good at and unique and accentuate that.
I think I will add a bit more to what Leon just said. The role of the agent has always been the brick and mortar of the remittance industry. They are the people we were using before technology came in. And how did they cope? They coped because people trusted them. You have somebody that you go to who will take your money and promise you they will deliver the money. And they did. And in most cases too, you realize people go to agents that they have an affiliation with. Either they could speak their language, they could express what they want to do properly with the agent understands, the agent then processes the money for the person. As Leon said, if there's any hiccups, they'll go back to the agent. The person is not going to pick up a phone and speak to somebody in the call center and go through a long process of your transaction number, whatever. The agent will sort all those things out for them. So we have a market there that the people are willing to go back to the agents and do a face-to-face transaction. Even by doing that too, you realize that these agents have cultivated the habit of knowing that if there's an additional product within the remittance industry, they could target specific clients that they could sell to. For example, insurance. For example, other things that the principal is trying to promote. The agent is the right person to do it. So I think we have a strong case for the role of agents at the moment. Look at Western Union, MoneyGram. Majority of their money comes from agents. It's not digital. So they are very strong on the marketplace, and I think we should look up to them.
Okay. Sharon, any thought?
Yes, mine is a little different. In Jamaica, there's only one bank, excuse me, that offers remittance services. So what you find is that for the banks, a lot of the banks, they're reducing their physical footprint in the island. And so what they could do is to form a synergy with the agents. So the agents would be able to offer their near-bank products and services. But for that to happen, there has to be the technological capability. So there has to be a synergy, moving from operating in a silo, a bank plus an agent versus an agent, and bring about this symbiotic relationship where they can now satisfy the needs of their clients.
This is very important. For the agents to, adapt. Okay. In Africa, for example, many agents disappear because of this shift in the business. Those who survived, was obliged to adjust and add additional services, as you mentioned. And the situation is really particular because, in Africa we have the unemployment issues, okay? And most of the agents are young boys, young fellows who decided to, create a shop and start, doing remittance to make a living. It is extremely important, in this part of the world for our agents to survive and this trend. So my next question, and we will share our experiences, going forward. Next question is for all of you, but we start with Leon. Are there different considerations between send and receive agents? If so, what are they, and what is the prognosis for the future?
Okay, good question. So I think I started trying to answer. I'll try and answer it quickly. I think, first of all, yes, there are. It very much depends on the send markets, but I think in the send markets, we're generally seeing well, we have seen, partially COVID-driven, partially because it was happening anyway, a big shift to digital types of originating a transaction and paying for it, and which means people don't need to go to agents nearly as much as they used to. And I think we'll see that trend just continue more and more for convenience purposes, and also because of the way it's been priced and positioned. It's probably quite advantageous to most people to work online. I think on the paying out side, in many countries, there's a much greater need for agents, even in the digital environments. There's a lot of education needed, and I think that is something that is a key role for agents going on, particularly on receiving money, but also because the degree of accessibility via digital means varies so much from country to countries, and the agents are providing a vital role, first of all in paying out money, but also quite potentially in the provision of other financial services to the customers, and in significant parts of the world also just the reliability of digital services is still in its infancy. So what we talked about yesterday in terms of infrastructure and so on is quite limited. So to get money as close as possible in the most efficient manner to receivers is going to still rely very much on agents. So I think it is quite different whether you're looking at send end or the receive end of a transaction.
Okay.
George?
Well, yeah. The receiving end, from where I stand, the majority of the agents, for example, since the mobile wallet has become the main source of receiving funds, where they've used the agents, the receiving side, what is happening is the telcos got their agents. For example, in Ghana, we have over 180,000 agents. Their main role was to sell SIM cards for their clients. But since the mobile wallet came up, they now dispense cash. So you go to these payout agents and you are able to dispense your wallet with them. So this is something that has increased dramatically, that you get young people trying to set up a business, and what they're doing is setting up agencies to be a payout agent for the telcos. And in so doing, they are also dispensing remittance at the same time.
And what about the send side?
The send side, the agents play the role that I said earlier. They would be able to survive based on the historical things that they've done, and with more technology that they would have to apply within their agents to be able to cope with digital. For example, the card reader. If they have the card reader, they are able to get their clients to use the card reader because the client trusts them that the information they are putting in there is secured. They either use a chip and pin. So within the agent environment on the send side, the person who is using the card, although if he's going to use it on the digital side, would not have trust. But if he's doing it with the agent side, the trust is there and he's able to use it. So we can combine agency with digital at the same time, and it will work.
Sharon, any thought on this?
I think for us in Jamaica, the senders, it's a combination of both inline and online. So what you'll find for the more professionals and those who are in other activities, they will use online, versus the undocumented, those are the ones that will go in the stores. In Jamaica now, as it relates to the receiving side of it, it's also a combination. There was a time it was 100% in store. We're now at about 40-60, 60% picking up at the locations versus 40%. depositing to accounts. So I think the complexion is changing in Jamaica, moving from more of a inline activity to more online.
Can I just say maybe to add, and I think maybe slightly different viewpoint to George, although there will be a role on the send side, I think there'll be much less agents, and it will be, even for them, it will be a much more reduced role, because we shouldn't forget that each agent in most countries requires a level of compliance activity. In many countries, you have to pay a per location fee to the regulator to keep an agent open. So if the volumes going online are going to increase, whilst physical networks will still continue, I think there'll be physically less outlets than there were before, just because of some of those compliance and agent management issues.
Okay. What do you think about this new situation happening in some countries? We have agents now charging their own fees above what the MTOs are doing.
That's new for me. I've never heard of it, so I wouldn't be able to come.
This is happening. I don't want to give the country, but this is happening. So agents now, I mean, in some countries, are charging their own fees.
Wow.
Because, I mean, of this trend we are talking about. They are getting
under their own brands, you mean?
Yes, at the branches. So if you want to come and collect your money, they charge you something. Wow. Which is not, I mean, related to the MTOs. So lots of things happening. Oh, yes.
I'm just thinking that, just thinking based on what you're saying, is that probably it's a cost of cash. So they have to go to collect the cash to pay the beneficiaries. There's a cost associated that they're probably passing on to the beneficiaries.
Yes, I mean, they're saying that what they are now earning from the MTOs is not helping them to cover their own charges. Because now the transactions are more going digital, so the sending client is paying less. So the commission to be shared is going down. And the agent at the bottom, they are getting less. And some of them decided to do. Maybe it will happen in some areas. I mean, we will see. I just give you the information.
I think it is a definite phenomenon, and it's almost a formalization of some of the informal things that have happened in the past, where if you're running a money transfer company, on the send side, you might quite often get a complaint that on the receive side, the cashier paying out has asked for some sort of payment for undertaking that service. And it is going to be a big problem in terms of maintaining the quality and reputation of your particular product and actually meeting your regulatory requirements quite often as well, because obviously, as we were saying yesterday, under the transparency rules, you need to be able to say how much money the receiver is going to be walking out of that branch with or have credited to their wallet. So if somebody's applying another fee, you've got to find a means of telling that to the customer. I think it will end up in some consolidation around. There'll be less agency in those circumstances, but they'll have to be paid enough to make it work for them.
Okay. So next question. If MTOs allows agents to be able to offer value-added services, such as transaction bundle, airtime, data bundle, top-ups, etc., will it help save the agents? Who can take this?
Okay. I think it would. Every little bit helps because the agent cannot only rely on cash. If there are other add-on products for the agent will have the flexibility. For example, now, if you go to an agent, you can transfer money into your account. The agent can do that for you because he's using the same platform as the digital platform provided by the principal. And also, if they are able to do that, they are able to expand their sphere of control, because what will happen is that the principal will give the agent the flexibility to sell more products to their clients. For example, we facilitate account opening on behalf of some banks in Ghana. So the agent.
You are doing it where, here?
Yes.
Okay.
So the agent here would then help the customer complete the forms. And then we would then send it to the bank because we are just facilitating. We don't open bank accounts, we just help them. So the agent takes that role as well. Once the agent is able to open that account, what happens is the customer then goes back to the agent and transfer money into that account, thinking that that is the only place they can move the money from, but you can send it from anywhere. But then it brings loyalty that, oh, I've opened an account, you help me open an account back home, and then I'm coming to put money in. So it creates a repeat visit to the agent. So it's good to have added products rather than just the money transfer aspect of cash.
So do you pay the agent for helping the customer fill those forms in?
Yes, we do.
So it's an additional income for them?
In addition, because it becomes something that the agent has done it, so we give the agent a commission for setting up that account.
And some banks were even giving commission on the transactions to push the agent to bring more.
Yeah.
Okay. Anything to add, Leon or Sharon, on this?
I think the only thing I'd say is you're exactly right. I think you need to look at the agent as either a gateway or an exit point, and it's like you're opening a pipe from them through your service. So if you're the one offering these products and services, then really you're taking what the customer needs in whatever format. You're leveraging your trust and putting it through there. So I can't see any reason why you wouldn't try and facilitate making that happen through an agent.
Well, in Jamaica, it's a little different because the agents.
You might. Okay.
You know what I mean?
Okay.
In Jamaica, it's a little different because the agents, for them to operate, they have to be approved by the central bank. And the central bank dictates exactly what sort of services that the agents can offer.
Ah.
Yes.
The agents, I mean, those shops, etc.
Yes, they have to be approved by the central bank.
So anytime they want to add a new service, they will have to go back to the central bank?
The central bank
approval?
dictates exactly what it is that they're able to offer.
Jamaica is difficult for the agents. Huh? Because what we are seeing upstream is the same downstream. I mean, in Africa as well, more and more banks, as you said now, I mean, are trying to, I mean, to improve, to broaden their network with agents and giving them additional operations to do, okay? Most of now the banking, small transaction, withdrawing from your bank account or depositing can be done now at the agent level, which gives them, I mean, additional revenues next to the remittance and so on.
So the agents, they're able to do other activities, but as a remittance agent, when they're approved by the central bank, they can only do remittance services. So they may have a supermarket, they may have a Cambio or whatever else, but for them to offer remittance services, they have to be approved by the central bank.
Okay. Next questions. In Africa and Pakistan, more and more mobile money operators are getting an EMI license. Will this change the landscape and how? Mobile operators are getting more and more license. What will happen next for them, for the banks, for the agents?
I think there won't be much of a change because the the MNOs will be playing the role of a bank because the mobile wallet will be acting as a portable bank anyway. So, for example, in Kenya, there's the M-Shwara, which offers an overdraft on the wallet and also gives loans on the wallet. So there is a collaboration there that the wallet is being used as a bank. So if the person's got an EMI license, the person can offer all these things, but still be within the remittance sphere. So there won't be any much of a change in there. That's my opinion.
Yeah, I mean, I think we have covered some of this before, which is good. Hopefully we're saying the same sorts of things, but I do think that I agree with you completely. MNOs all ready to operate have agent networks, so you're effectively putting a new product through. I think that products with the banking ones, but also I think if we're talking just about remittances and paying those out, that does have some operational implications, particularly for the agents in terms of making sure they've got sufficient funds to be able to actually meet the demands for paying out. Because if you think about it, as under their M&O business at the moment, the actual individual transaction levels are very small, $5 to $10 maybe. But if you're paying out international remittances, you're talking about $100. I think the average mobile to mobile transaction is about 100. And if you're talking about from a traditional remittance originating here being paid out to a mobile agent in parts of Africa, say, or Pakistan, you're talking about several $100s, which might actually be a large chunk of their liquidity for that day. So actually you have got some of those operational implications to look through in for the MNOs in working with their agents. So that would be maybe one of the big things that I would see.
Sharon, any experience in Jamaica?
Not relating to that, no.
So agents, I mean, MNOs getting now licensed in Africa or Pakistan, what we see, I mean, is now that the transaction is shifting from the banking networks, because, I mean, there are different types of networks. I mean, the banks have their own branches and their own agents, but you have MNOs with their own agents, okay? And now, as you said it, I mean, in Ghana, if 70% of the transactions are going to mobile, meaning that those transactions are going to the MNO's agents, not the bank's agent. And this can create problem, of course, and that is why we see some banks retaliating. But anyway, important, let's progress with the other questions. Maybe if you have enough time, we can come back to this. MNOs are taking over the last transaction leg from banks. Okay. Is this healthy? What does this mean for the future of financial inclusion? George, you want to take this?
Yeah. Okay.
So they are taking over for the last transaction leg from banks.
Yeah.
You said it already. Okay?
Because
is it healthy?
It is healthy. Competition is healthy, and I think it brings innovation. What is happening now is that the mobile money operators are beginning to make sure that the underbanked are able to use their products. My mother, my grandmother have got mobile wallets, you know, so it's not something that they would be prepared to go to a bank to go and cash up or queue to collect money. For them to go with an ID, for them to take documents before they get cash. So they are more than happy to have it on their mobile. When they are ready, they can go and withdraw some of the money, not all the money. You see, so it gives them that flexibility to control their funds on their wallet. And also, it also makes sure that there is the buyer and the seller are able to operate within any environment without the assistance of a bank. For example, when we had the flood in Pakistan, you might have one village cut off from the other, and the bank might be on the other side. But because the person's got a mobile wallet, he doesn't need the bank. because there's still trading going on. The person will need to buy fuel, needs to do that. But because he's got mobile wallet, he's able to do it without any restriction. So for me, it is healthy that the MNOs are encroaching on the banks, and now it's making the banks also behave as if they are MNOs. So it's helping both parties to then bring in innovation, and in so doing, it's helping the customer. And the customer is the person who is deciding where his or her money will be sent to. So I think that is something that we need to bear in mind.
Leon?
Well, I'll go in a minute, but Sharon, I always feel like you're coming at the end of this, so we should let you have a chance to speak before you, because we might have covered everything. Although you will say it's different in Jamaica, I know
Yeah,
that.
it is a little different, because as I stated earlier, mobile wallet, just one bank has started offering that service. But for
Just one bank?
Yes, it's very early days. The government is pushing it because we have CBDC, but it's very early days. But from where I'm sitting, for it to really work, there has to be interoperability. Without that, they're just going to operate in silos. So that is going to be very important if it is really in the remittance industry, so that any of the different operators will be able to use the wallet and go across the different platforms.
Okay, thank you. Leon?
Yeah, I mean, I think, well, let's say, first of all, for most of my time in remittances, one of the big challenges was getting enough agents, particularly in the payout countries, to be close to people who actually needed to receive money. And one of the things the MNOs have is actually really good distribution generally. So for me, anything that increases that distribution capability is great. And if it comes by the MNOs and it's all done properly, then I think that can only be positive. From a financial inclusion viewpoint, I think if we can put other products rather than just remittances through them, that's great. And if you actually look at it, where the MNO products and mobile-to-mobile type services work best is clearly where digital is most entrenched in the local infrastructure, and actually the number of transactions you see through cross-border remittances is a tiny fraction of the total volume that they're handling. And most of what they're handling is domestic types of payment and financial services. So they have a tremendous potential to increase the penetration of financial services, which will bring more people in to be financially included. Which I think has to be a good thing. And I think the better the local digital infrastructure, in a way, the less need for agents to actually pay money out, but actually more as service points and offering other products. So, you look at everybody's favorite example of M-Pesa in Kenya, you talk to a lot of people who hardly ever use cash for anything because you can pay for anything from your M-Pesa wallet, which means you shouldn't have to go to an agent for anything other than another type of service that they offer. So, for me, it can only help.
Yes. One thing I always say is that what MNOs are doing can be done by fintech as well, and even banks. Building a network is easy. What MNOs, succeeded to do, as players can do, but unfortunately, there are some obstacles. I can share my own experience on this, and this is related to the topic. To compete with the MNOs, it is very difficult, because MNOs are playing with two types of regulators here. They are playing with the telecommunication regulator, and now they play with the financial regulator. The financial regulator gives them the license, they have the license of the telecommunication operator, and they have the platform to offer their service. We players, fintechs or banks, we deal with our financial regulator, we can have the license, but we cannot benefit from the old license and use the same technology to offer the same services as, MNOs. And this gives them advantage, okay? And this is an obstacle for banks and fintechs. Because if I have the same platform as the MNOs, I can be everywhere. I can give my own phone number. I can have my clients everywhere in the country, and my clients can use, the USSD, etc., to transact. So this is a huge advantage the MNOs have, and other players cannot have. And I believe that till we do not allow the other, the financial institutions to come and have the same license and edge than the telcos, the competition will not be fair for me, okay? It will not be fair. It is something maybe we have to look at. Next question. What does this mean for the future of financial inclusion? No, this was already, sorry.
I was going to say, I think we've answered that.
The changing face, Sharon, the changing face of the remittance clients requires a new approach. How can MTO keep abreast with the needs of clients, and how will this affect the business model?
Well, for one, in the early years, migrants were undocumented and unskilled. So the only option they had would have to be go inline to a location, and then by extension, the beneficiary would require an agent to pay out cash. But what we've seen is that there's a change. There are more professionals now and skilled persons who are becoming migrants. And because of this, their needs change. They're looking about convenience and safety. And convenience means banking anywhere, anytime. So for that to happen, there has to be a synergy between the banks and the agents. So for example, to now understand the needs of the client, the banks would also need to say, what is it that do I need to offer to this particular beneficiary, given that their profile has changed. And for the sub-agent or the agent who pays out cash, they probably need to collaborate with the bank to say, okay, I'm no longer paying, so what can I do in return for these agents? Can I now offer some of your services? Of course, based on regulatory requirements.
Thank you. Leon, George?
No, I'm going to pass on this.
At the moment, the client has become very sophisticated. And to me, it's putting a lot of strain on resources. For example, you get clients who want things to be done instantly. And even they want it instantly, they want you to tell them you've done it. Mm-hmm. So you pay, they want you to send them a text and say, I've paid your money. And woe unto you if you say you do it in 5 minutes and you do it in 10 minutes. Mm-hmm. Somebody will pick up a phone and say, you are not doing what you told me you were doing. So with this in place, you get a lot of companies now running after the customers. And by so doing, you get cost involved because you have to be sending texts, you have to get a good call center to handle calls. Mm-hmm. And now the client will not, so some of them would even call you. They'll send you an email and they want you to respond. Somebody has to respond to those emails. Somebody will go onto your chat and start chatting. He wants somebody to be chatting with him. So you get somebody there responding to emails, somebody on the chat. And if you don't do that too, they go onto the social media and start giving you a review. And now, before somebody uses you, they go and look at your review. And the review, if it's not good, it impacts on your service. And now you've got a social media and you've got clients who are savvy. The client has got a mobile phone. He's got 4 or 5 apps all doing remittance. Before they do a remittance, they go on each app to see your rates. In the past, it wasn't like that. Now, the customer is so savvy that before he even transfers money, he doesn't care what you're doing. There's no loyalty anymore with clients these days. Mm-hmm. Everybody's looking for good price, good fee, and everything. So on his app, he's got 3. So he looks at you, he said, no, Today you are not good. Tomorrow he comes to you, oh, you are good. So they keep doing that. So the face of the client in terms of the remittance is changing. And it's changed so much that we are having to do a catch-up because now is the client who is telling us what they want. And if you don't offer them, the means to move is simple. It's not traveling by bus going to look for another agent. He's sitting in his bedroom and he can decide which service he's going to use. So the face of the client has changed dramatically in terms of a remittance.
Leon, anything to add on this?
No, the only thing I'd say is actually, in a sense, that's good, isn't it?
Yes.
Because the customer is getting what they want.
Yeah.
And I think that the challenge is, in a way, how you keep up to speed with your customers. And I think generally I'd be interested to know, maybe in the Q&A or whatever, from companies, what type of loyalty activities they're taking. Because you mentioned about loyalty, but if you translate that to another part of your life, I can't think of a good example right now, but if you like a particular product and your historic provider who you've been there with for 10 years suddenly becomes, it's more expensive there, and if something goes wrong, you get worse experience. Why on earth would you stay? So I think the key thing is, how can you stay up with or even ahead of what your clients want? And you've got to be very close to your clients, but in a different way that you were. So I know there's people out there who've got strong loyalty schemes or strong customer knowledge activities that they do, and I'd love to hear more about some of those.
One last question, Asmi. Do you think that technology can help clients, preserve their traditional role and adapt with the new trends?
Help agents, you mean? Or
Agents. Do you think technology can help them preserve their role?
Yeah. Well, shall I go first?
Okay.
I think obviously yes. We're at a sort of technology-driven conference, so if we said no, we'd probably get kicked off the stage anyway. But I think yes, in multiple ways. And I think if we just take that last point about understanding the customer and so on, there are now so many techniques of actually understanding the customer. Hopefully not 25 surveys saying, can we just talk to you about a website, but there's more intelligent ways than that as well. I think technology can really help. I think understanding and actually collecting data from your business and your customers and really interrogating that to understand what their behaviors are, why are they going to particular agents rather than other agents who might be right in the same area, all of that type of thing. That wasn't really possible before. The actual data and its potential interpretation is a really important use around the technology. I think some even more basic things like making sure you can use your mobile phone as a terminal if you're an agent, rather than having to get fixed line terminals into a location. It's endless really, and I think it's understanding what technology what are the most important things for your business, and then which pieces of technology are what's available to help me manage that. And particularly with agents, I think it's particularly important for things like communication, and some of the really mainstream problems that we used to have even around accounting, regulatory compliance and so on, that used to be so difficult. Now, technology should make it easier. It comes with a price, but it should overall reduce the cost per transaction. And so for me, there's just so many ways that technology can really help with companies to manage their agents. It can help the agents to do a better job, and it can help businesses to manage their agents much more effectively. But it's easy for me to sit here as an advisor to say that. How that happens is more down to the people in this room, I think.
Okay, thank you, Leon. George, if you want to add anything.
I think he said everything, but tech is quite key in the development of our industry. And with tech, I think the agent can also have more, if the agent has more access to information, it will help them a lot in terms of the AI data of their clients to be able to know exactly what the client wants when they are coming to do the transactions. So technology will play a key role in our industry, and it depends on how we handle that as well with the agents.
Okay, thank you very much. I mean, we have finished our questions. We will take now questions from the audience and from the online participant as well. Yes. Question for the panelists from the audience? Or we start with Arif?
We got
Okay.
one and maybe another.
Thank you. I thought your conversation was very interesting. I have a question. In the U.S., they are implementing many, I'll say, multitask like ATM machines in the agent offices to help expedite depositing of the cash or taking the cash. As we know, some places are going cashless to help the agent operations. Do you see that in other parts of the world as well? Is that like a tool that's being used?
Well, in Jamaica, we are a payout country, so our agents, they don't use AVMs. It's all cash over the counter. So I guess probably in the send countries it's a little different, but we pay out, so it's a little different from what you're asking.
Yeah, I mean, I'd say no is the general answer. There's a few countries like Australia and Japan where it seems to be prevalent. I guess it's where there's a high footfall and a relatively long transaction process. So it's just trying to move the pain or manage the pain somewhere else and make sure, because for agents, it's turnover and footfall that's really critical. So if you're taking 5 minutes to do a remittance transaction where you make a certain amount of money, but you've got all your other products in store that you're making more from, you just don't want to offer the service. And in Europe, I'd say generally ATMs are dying out as a whole. I mean, we continually see that the UK is a good example. I think the number of ATMs in the market has gone down considerably, partially driven by COVID, but also because cash is becoming less commonly used. And there's a political will to keep ATMs to a certain level, so the most deprived can actually access cash, albeit at a fee. And we see that throughout most of Europe. And I think in Africa and other places, ATMs are either few and far between or very much part of a proprietary network with quite high costs associated. So we're generally not seeing that, would be my view anyway.
We have some new initiatives in Africa with, some banks launching, this new service, allowing their clients to send via the ATMs. But this is really new, but we will see where it will go.
Another question.
It's probably more to help with the question whether the banking services are available to the agents, because obviously in Australia the challenges for debanking has extended to the sending agents, very much so. And unfortunately, Austrac, for example, in Australia, maintains a listing of who is an MTO and who's an agent. So the banks just basically go in there and they find whoever you're there and debank you. So what I'm seeing at the moment is starting to increase is Western Union and these guys, they're providing FPOS machines to their agents, to the sending agents. So, you know, their banking accounts for their businesses are not affected by the actual money flow. So they're distributing FPOS machines, which goes back to their accounts. That's becoming quite prevalent. Or they do have a lot of those ATMs particular to money transfers installed. For example, you know, in the 7-Elevens, they all have these machines where you can just go process your stuff. So, yeah, that's just to add to that.
Thank you very much. Another question, or we?
There's a question.
Hi, we used to talk about the online agent model, where essentially physical agents would transition magically to become online and transition all their clients to be online clients. Have anyone ever seen this work in reality?
Can you just explain a little bit more?
Well, we did pilots where we would take agents, and they said, okay, let's transition your customers online. So the agent would still get a revenue from the client ongoing, and they would become an online client. And so the agent would still have the relationship with the client, and they get an ongoing revenue model. And I've heard different remittance companies talking about a sort of online agent model, but I haven't seen one, except for affiliate programs. I'm not sure I've seen one actually work in real life. Have any of you?
Nope. No, I haven't.
Well, the technology exists, but where is it working well? I don't know.
I mean, it's a good question, and I'd say some of the larger and more established remittance companies with a strong history in cash and a strong agent base would probably be better able to discuss that, albeit they might not want to in a forum full of potential competitors. I mean, it's interesting because I think it's been one of those things that has been talked about for a long time, and I think it comes down in some ways to the commercial relations between you and your agent base going forward. But I'm not aware of anything in the public domain on that.
Maybe one of the players here who is using it can tell us.
Probably a good way of getting some.
We have. Mike.
I think in Pakistan, this is something very close, not exactly, digital, but if a cash payout is sent, the agent converts them into a digital wallet, and when it is for the first time, and second time onwards, it directly gets credited to wallet. So that is where they push the digital, usage of money remittances. This is happening in Pakistan, so that's what I know, because we do deal with outward remittances to Pakistan, and the cash payout, it gets turned out into a mobile wallet, and the second time onwards, it directly hits the wallet.
Thank you very much. Very interesting.
Yes, good question.
Any other question? Or?
Hello. I think if I can add something more, sorry.
Yeah, sure. Okay.
At Alphadan, we have a super app wherein we are working on now. If there is a receive money inward, the cash payout, if someone is having an app, he can push that to the wallet. It's not yet live, but as we speak, we are working on that as well.
Yeah, I guess the question was about the role of the agent and how much remuneration, or does that model change? So I think you're exactly right. And actually that Pakistan example, I guess the Nigerian government's also been trying to do something similar in getting everything pushed through to an account, even if it was traditionally cash. Okay.
Yeah, hi. First question is, what's the panel's view on, what's it called, gift cards? Peripheral services like gift cards and airtime. And then I have a comment about the previous question as well. But
Well, in Jamaica, in the remittance industry, gift cards are not allowed, stored value cards or remittance services. It has to be deposited to a bank account or to a prepaid account or cash. Well, and of course, when the wallet comes, but not stored value cards at this time.
I mean, my view would be their ancillary services. They help you offer more to your customer than just a straightforward payment service, which is good. Whether they're likely to be big revenue earners is probably questionable, but they're definitely customer loyalty technique, some incremental revenue, and for me, they can be good. I think in this day, from what I can see, you know, the average transaction value through airtime top-up or a gift card will obviously be much lower than a normal cross-border remittance. But actually, it's in the same general area, and I think so generally, if you can offer them cost effectively, it will help more with customer loyalty than revenue in most parts of the world, but that's just personal view.
Mm-hmm. Regarding Anthony's question, Anthony's not here. So, yeah.
Comment on what your question.
Yeah, please.
From a Kenyan perspective, from what I know, UBA locally in Kenya, they see, because liquid cash management is a challenge to most banks. Most banks are struggling with cash, so they would rather clients accept such alternatives, you know, anything that prevents banks from having to pay out cash, specifically from an African, like you did mention, Nigerian point of view. Same thing with Kenya, Ghana, those areas. Thank you.
So there is a solution based on our experience with clients, RemitONE's experience, that helps the, you know, saving the role of agents. You have an agent, they'll have their own branding. They work with a licensed entity. So you can have a mobile app. For example, we have 3 agents, agent 1, 2, 3. Agent 1 has their own logo, agent, and so on and so forth. They're all working with a licensed entity, a RAS provider, or an MTO. So that is one way. The technology is there, the solution is there. I think in the last 10 years, I can think of a couple of clients of RemitONE's who've actually done this and proven that the model works. In fact, I know, certainly know one of our clients is doing this right now as we speak. So they have multiple agents. These agents have their own customers, right? And the aggregator doesn't care. The aggregator does not have a direct relationship with these customers. The customers deal with the agent, but because there's no physical cash involved, there's a reference number. So, so the aggregator knows that these customers are coming to me through this particular mobile app, which has the logo of the agent and the logo of the aggregator to fulfill the regulatory requirements. So that's one way. And again, the same thing, swap the mobile app with an online portal. So that is there. So I hope I can tell, if I find, oh, there he is. Okay, so you got the answer. Okay, thank you.
Thank you. Arif, any question from the online audience?
Yeah, so we have a question from Zishan Khalid. It does kind of tie in with a lot of discussion so far, so there might be overlap. Will we see the agent model, which Western Union, MoneyGram, and Rio are well known for, replaced by MTOs dealing with their customers directly?
Did you hear the question?
I heard the question, but I wouldn't mind hearing it again because I'm just trying to work out what it actually, just how to answer it best, I suppose.
Yeah, so will we see the agent model, which Western Union, MoneyGram, and Rio are well known for, replaced by MTOs? Will we see that model replaced by MTOs dealing with their customers directly, so cutting out those agents effectively?
See, I would put Western Union and MoneyGram and others in the MTO category, so that's, I think, what's sort of confusing it. So it was definitely MTOs, not
Not
MNOs.
MNOs.
Yeah, MTOs. I think what they mean is the agents that they work with, cut them out, and then customers would probably go online to, to the MTO site, work with them directly. That maybe that's the intent, right, behind the question.
Well, I think we've seen that for probably almost since remittances started. I mean, I'm looking at Richard, not to pick on you, but if you think in many ways, if you look at it, how the service that Western Union and MoneyGram have a lot of good things, but one of the key things is the reach, the number of countries and the number of partners they have. And there's lots of instances where a corridor-specific operator has then partnered with Western Union or MoneyGram. So the operator has worked on a particular corridor, say France to Morocco, but they've also used that connection from that office in France to be able to send to every part of the world that a Western Union or MoneyGram does. And actually, I think in other ways, you've seen where people have started as a Western Union or MoneyGram agent and then seen really big volumes in certain corridors and basically tried to then operate directly in that corridor as well. So I think we've had it for a long time. I don't suppose it's going to go away. And a lot is driven by the customer base that somebody has.
If I had the question right, is it because they think MoneyGram and the Western Union will go directly to the clients and sidetrack the agents? So they will go directly to the clients, and then the agent becomes redundant. In that form, then it becomes a digital business. So they dealing with they are dealing directly with the customer, not through an agent. So it becomes a digital service. So at the moment, they are trying it. They are moving forward with the digital platform. So I think with time, something might happen, that a lot of their clients will go directly to them rather than going through their own agents.
I think it has a great impact on the regulatory requirements for each country.
Yes.
Because I know for Jamaica that wouldn't work based on our regulators. So I think a big part of it would be dependent on the regulatory framework in the send country and the receiving country. That would have an impact.
Okay. Yeah, for sure.
Leon, so questions for you, I think, or maybe to Richard. So MoneyGram, so the model that I described in the previous question, is MoneyGram or Western Union, are they doing this? Are they providing a solution for agents which keeps the agent as, as part of the ecosystem, as part of the supply chain, the way I just explained from a tech perspective?
So we have a digital online platform, which is e-commerce. Consumers can go in and register themselves and follow the normal procedures and then transact online using their debit card. And then using the payout network across the globe that we have. We also have a referral service whereby that agent is reimbursed for referring traffic to the online platform. So a consumer who doesn't want to transact in cash anymore or do cash can go online that way. That hasn't been hugely successful. I mean, most of the time, anybody who's walking to do a cash transaction, they want to stay cash. I think the consumer is very different. The cannibalization of cash to online is low. And I think, as we all know, as this industry has moved along, people like me get older and are not economically productive anymore, and don't use cash. So the youngsters coming through are more and more using online, and so the weighting of online becomes more versus what cash. But I think to the point that the cash network we have globally is hugely important to us, and that doesn't go away. You can't have a good digital program without a payout network, and those agents provide that. So that's hugely important, and I don't believe that'll go away. Coupled on the receive side with your wallet and your account deposit products, which then provide that financial inclusion and that digitization on the receive side. But the physical presence of agents is hugely important and will remain.
Okay. Thank you. Are there for another question from the audience or?